By the end of this video, you're gonna know the 7 places I would stay away from if you're looking to invest in real estate in 2024. Because if you invest in these cities, there's a chance you're gonna lose money. By the way, the last one is probably gonna surprise you. But first, I need you to hit that subscribe button. If you want to get better at real estate investing, you have to follow this channel. So I look forward to supporting you. Also, be sure to go to the description section of this video. I have a bunch of free resources that help you get ready to invest in real estate in 2024. All right, first up is Dallas, Texas. Prices in Dallas, Texas are projected to drop by 8.4% in 2024. So if you look at this property, it had a $188,000 price cut back in December, and there's a good chance it's going to drop even more. The worst thing you can do is overpay for a house. And a lot of houses that are on the market right now are way overpriced. Something else to keep in mind are interest rates. Interest rates have been really high and have kept people on the sideline. So perhaps that's another reason for the prediction that prices are going to drop. As a matter of fact, if you haven't heard, the Federal Reserve shared that they plan to start dropping the interest rates in Q2 of 2024. So we'll see. If you want to flip a property in Dallas and you pay $200,000 for it, you put $100,000 into it and you expect to exit and sell it for $400,000 and you haven't done your homework, which means you haven't looked at the comparable sales for similar properties and you're just expecting to be able to sell it for $400,000 when in fact, based on the property type, you can only sell it for $300,000, you're going to lose money, tens of thousands of dollars. So it's important, very, very important to make sure that you're doing your homework. But that's nowhere near as bad as this next city. This next one is one that many people might find controversial. So let's get right into it. All right, so up next is Austin, Texas. Home prices in Austin are expected to drop over 12% in 2024. So there was a couple in Austin who originally listed their property for $549,000. They received an offer for $10,000 less than that, and they ultimately ended up selling the home for even more of a discount. I don't understand why somebody would purchase a home they plan to sell fairly soon overpriced at a price that's just way too high and it's not justifiable. It's happening more than you think. So a senior economist at the research firm Zonda shared that Austin is a market that grew too fast for its own good, and I completely agree with it. The crazy thing is home prices in Austin are already falling. Median sale prices were down 8% last year, and they're projected to go down, as I mentioned, over 12% in 2024. Another problem is fewer people can actually afford the average home in Austin. In order to afford a median priced home, you would need to earn $150,000. And that's way less than the majority of people make in Austin. These next 3 cities are in California. So by March 2024, home prices in San Francisco are projected to drop 2.3%, which is equal to about $25,000 by March 2024. And this would leave home prices at around 1.1 million on average. The crazy thing is, according to a report from Redfin, home sellers in San Francisco are 4 times as likely to take a loss when they sell their property. That's a problem. It goes further to say the typical San Francisco home seller takes an average loss of $100,000 when they sell their property. All right, so let's take a look at this property right here. So this property has been on the market for less than 2 weeks at the recording of this video and already has a price drop of $251,000. This should say all you need to know. It really should. I mean, these homes are just ridiculously overpriced and people cannot afford them. Another reason for the home price predictions in San Francisco are tech layoffs. So according to an article from SiliconValley.com, tech companies, including the most recent disclosures of job cuts, have now cut more than 31,000 jobs in the Bay Area during a nearly 2-year period that began in January 2022. So a lot of people are losing their jobs. What does that mean? There are fewer people who are able to buy homes. Another reason is that San Francisco is simply not as popular as it was before, and also remote work. A lot of remote workers left the San Francisco area to go to cheaper places, keeping that salary, but having a much lower cost of living. So at this point, we have 4 more cities left to go. 3 of them are in very popular states. And I'm telling you, the last one we go over is really going to surprise you. So make sure you stick around to the end. Next up is San Jose, California. So by November 2024, home prices in San Jose are projected to decrease by 6.1%, going from 1.46 million to about 1.37 million. So quite a significant decrease, but to me, it's still incredibly unaffordable for the average person. So similar to what I said, Zillow's senior economist mentioned that the home prices in San Jose are far too high for the average person to purchase properties, which means the prices need to come down if they want to sell these properties. So check this stat out. This is crazy. It takes a salary of $402,287 to afford a median priced home in San Jose. The problem here is that the median salary is $125,000. Prices have to fall in order for people to sell their homes. That's just what has to happen. And if it doesn't happen, I don't know what to expect if these prices just don't come down. It's not sustainable to me. This is terrible news for people who want to sell their properties out there anytime soon, because you are probably gonna lose a lot of money. All right, so the next city I wasn't thinking about whatsoever, and it surprised me, so I know it's gonna surprise you. Woo! Palm Springs, California. So let's check out this listing right here. So this property right here was purchased in March 2023 for $1.4 million and was put back on the market for close to that price. As of January 2024, it's under contract for $635,000. The seller is going to lose over $760,000. This should tell you all you need to know about this particular market. So many homes are overvalued. This next city is a place where so many people want to go on vacation. And I encourage you to go on vacation and nothing else. Go on vacation, go back home. Don't even bother investing in real estate here because you're going to lose money. Next city is Honolulu, Hawaii. By March 2024, home prices in Honolulu are expected to drop $18,000, which would leave home prices around $850,000. In my opinion, it might go down even further, and I'll tell you why. So according to this report, urban Honolulu is the 5th most overvalued area in the country. Go there for sunshine, come back home, don't bother buying real estate. I mean, this data should really tell you why you should avoid buying real estate here. And if you decide to buy here, you are probably going to end up overpaying. This last city I'm going to mention had a listing that completely shocked me. The last city on this list is San Antonio, Texas. Home prices in San Antonio are expected to fall by 9.4% in 2024. According to Redfin, by November 2023, home prices in San Antonio were already down about 4.6%, putting the median home price around $256,000. With these prices projected to go down even further in San Antonio, I think this shows that a lot of these homes are simply overpriced. Let's take a look at this property. So this property has been on the market for over 220 days and had a $20,000 price cut around Christmas simply because no one wants it. What other theory can I come up with besides the fact that nobody wants it? All right, thank you so much for watching. Make sure to subscribe to the channel, like this video. And now, since you know the places that I recommend you avoid, or at least I'm going to avoid, I want you to learn about flipping houses. So check this video out. It's going to teach you all about how to flip houses. Thank you all so much, and I'll talk to you soon.